All right, we are live. Oh, welcome again to Chasing Alpha. Yet another riveting video from us. Look, my name is Rod, and this is my partner in crime,
Dean.
Dingo Dean, DJ Dean. Call him what you like, but that is us today. Well, look, we've got a video. Before I say that, I should say this is not financial advice, as we say every video. These are just our personal opinions. We're passionate about the crypto market, but do not take our word for it. Do your own research. We'd also love to hear from you. Give us your feedback. Are we wrong? Are we right? Have you got anything extra to add? We'd love to hear from you. Look, please do like our video, comment, subscribe to our channel. We also have a Telegram community building as well, so we'll post that in the comments below. So, Dean, what are we looking at today, man?
Good question. Let's do it. Let's get into it. So if I can request you to bring up the slides for us.
Yeah, you asked so nicely, so I shall do this.
So today, well, I was bringing that up. So today we're going to cover three.
I did this last time. Okay, Matrix.
Right.
We're not talking about the Matrix today. We are talking about.
There you go. So over the last kind of trading history, the last couple of years, slightly longer than that actually, we have realized that even veteran traders and investors fall into the trap of making mistakes on their trades, and majority of these trades are behavioral, and because us human beings are wired in a certain to act in a certain way and think in a certain way, it's very hard to get away from it. So I thought I'd bring this and share this with you. You probably already know this. If you don't, great. You can add it to tool belt and always keep that in the back of your mind. Without further ado, let's get into it.
Sweet as. So our top 3 crypto trading tips, and for number 1, we have trading in small numbers or match trading volume. So what do you mean by this thing?
So basically, when you're buying or selling, you have to make sure that you do not dump the market or pump the market. So if you're a whale, this is going to say, for example, a whale that has let's say 1 million tokens, where the volume, the trading volume per day is like, say, 200,000, 300,000, right? So if you're going to dump that many tokens, you're going to be tanking the price, and it will put fear into the market. It will make the market a bit nervous in terms of what's happening. They might be thinking that the team's dumping. It will have negative consequences, which might take longer to recover. So what I would say is look at the trading volume, put your daily trading volume, and then match your orders. If you're going to be doing a trade of say 200,000, maybe break it up to 10 trades of 20,000 or even smaller. So you can actually take buy orders, or you can put some buy orders, sell orders if you're selling, as well as taking buy orders, matching up with other buy orders online.
Gotcha. Can I just add to that, Dean, and just to see what you think? Part of this is like, as you're mentioning in a second about altcoins. Let's say you've got an altcoin and you might be up 30 or 40%, or however many percent, doesn't really matter. You think, oh, great, I'm going to go sell it. And you go to a market that doesn't have much volume. Well, you're not actually going to get the price you thought for it, because the market's only pulling data from the top price that's available. So if you start selling off and taking up all those buy orders by selling off, the price is going to go down very, very quickly, and you'll be left with less than what you thought. So it's important to get to a market that's actually got enough volume to handle what you're looking to do.
And also, on a side note, I usually sell my orders in lots of 8s. So if it's very thinly volume market, I will sell it at 8 or 18 or 28 or 38 or 88 units at a time, because the Asian market, the East market loves the number 8. It's a lucky number, so and it actually works so far. It actually works.
Oh, I'm going to use that. I'm going to sell 8 Bitcoin.
Try it. People just eat it up. If you're going to sell it for 88, they'll be gone.
That's actually, this is kind of funny, but I used to have a numplate that ended 486. And I didn't know about it, but I had so many comments. Oh, you've got a very lucky numplate, and I had no idea. But apparently, there was some luck. So hopefully, we can pass that luck on to our viewers. So, crypto trading tip number 2: do not chase the market. What are you talking about here, Dean?
So, say that you hear a tip from somebody, and would there be one of these YouTubers like us? Although we would never recommend something that's already pumped so much, and or say, for my friends or whatever, always look at the market to see what's done and what the last all-time high was. Analyze, get a good feel for the market, don't just rush in.
Yeah.
And if you realize that you are getting in when it's already pumped 80% or even more, don't be afraid to walk away, because there's always another market. There's over 2,500 altcoins on the market at the moment, and so unless it's Bitcoin, it might be different. If it's the smaller ones, don't worry, just move on, shrug it off.
Yep, I like that. And look, one thing that I'll just add to this is don't get too hung up on a coin that might have done you well in the past and give sentimental value. I think of a project like Ethos, and I'm not having a go at them in particular, but both Dean and I did very well off them in the early days. We got in close to ICO or just after ICO. They had absolutely huge gains. In fact, they'll probably be one of the bigger multipliers in the last bull run. However, as a company's journey or life goes on, the company changes, management changes, and we still held sentimental value and thought, maybe it'll still do well. You need to try and cut the emotion up best you can, and don't FOMO in. And if you look at the price of Ethos, what it is today compared to what it was, there's been a good reason why we walked away. Although it was hard and we thought, it's going to come back, it hasn't done so, and we could have lost a lot more money.
That's right.
But you got to be very careful, don't you?
That's right. That's a very important thing. I think what you're referring to is a thing called exogenous risks. So things that are out of your control and things that you may not be aware of or may not have thought about. And it's a lot of times it's even out of control for the companies that are actually working to establish the tokens or the coins, the alt coins. So it's definitely something that anything can happen, right? So you got to be prepared for it, and always don't always put all your eggs in one basket, unless that egg is Bitcoin, right?
Well, probably Bitcoin's in a little bit of a special. Well, in some ways, Bitcoin's a kind of a case on its own. But any other coin or any opportunity, don't ever think this is the only chance I've got to do well. I mean, if you look at from when we did Ethos compared to now, it's been a couple of years. There's been so many opportunities. It's not even funny. So there's always another trade to be had. So that brings us to our third trading tip. Place an opposite buy or sell side immediately. So how do we do this, Dean?
So this is probably the most important one. So as you know, crypto is a 24/7 market. It's always open. So you're bound to miss a pump and or a dump. So the best way to avoid doing this is to beat yourself, as in terms of psychologically beating yourself and challenging yourself to overcome those challenges, is by placing an opposite sell or buy order. So if you were to buy something at, say, a decent price, you're pretty happy with the price that you bought it at, I would immediately put a sell order at 50% or even 100%, so 2x or more. So I would sell half of it at 2x and then maybe leave the other half there, or maybe put step some other trades along the way as well. So what that does is a couple of things. It kind of allows you to kind of forget about it, because there's so many things that need your attention. They got kids, work, home life, etc. And so you can just move on, and you can keep coming back to it as well to see how it's doing. And if you catch the market, that's great. But if you don't, you might actually, your sell orders might actually auto execute, and you'd be better off.
Yeah, that's a very good thing. And look, even though crypto is a super volatile market, the gains are crazy. Also, the losses can be crazy as well. We're looking at this from a conservative point of view. How do we conservatively continue to make money during a bull market? Even though in times past you can throw money at anything and it sticks, I don't think it's going to be the same on this particular bull market. Right. So this is a very important point. But look, if you want some more tips on this, please comment below. I mean, Dean and myself are happy to show you a little bit further on how to do this. Do you have any further comments on this tip here, Dean?
And also just want to point out the opportunity cost. In this market, opportunity cost is massive. We only get about 1 to 2 years of bull market. So we got to make every moment, every day, make it up, make the best bang for your buck, make the most, make it worthwhile, basically for being involved in such a risky market. So reduce the opportunity costs, place those sell orders as well, because you would never be unhappy cashing out $1 million or $100,000, because you'll have that. You can buy
True.
a nice car, you can buy a house, whatever.
Mm.
But you cannot, if it dumps, you can't buy with some crap coins a house, right?
Well, you can try.
You can try, but depending on who's selling, right?
No, it's a very good point. Well, look, those are our three tips for today. Look, that brings us to the end of our video. If you've got some comments, we would love to hear from you. If you've got something that we've missed out or something we should add, please comment below. Look, we do have a Telegram group called Chasing Alpha. It'll be posted below. We'd love to hear your feedback. Please like and also subscribe to our channel. Thanks for watching.
Cheers.